It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another episode of the Real Estate Breakfast as we talk property news every day, every morning from 6 a.m. and 7 days a week is heard on iHeartRadio, Spotify, Apple Podcasts and Amazon. And we're back into another weekend. Didn't take long to roll around. It is June the 8th today. And to see that inflation is on the rise again, it has been a bit of a talking point over the last couple of weeks, causing concern for both the government and the Reserve Bank of Australia. I see that our friend, former Treasurer economist Warren Hogan, told the ABC that reduced discounts on goods such as bread and cereal and fruit and vegetable have driven this increase. And additionally, the cost of services like rents, healthcare, banking and education remains elevated, further contributing to inflation. In fact, the Bureau of Statistics data tells us that core inflation, which excludes volatile items, rose 4.1% in April. We've reported on that, and this suggests that the underlying inflation pressures are not just stalling, but some would say picking up. And Warren is predicting that this inflation data is likely to push the RBA to hike interest rates later on this month, with potential for further increases to curb the demand. And of course, we just yesterday had some of those comments from Jim Chalmers with relating to all of those numbers. Anthony Landau is joining us right now. He's the Managing Director of Equilibria Finance. He is back on our Saturday Mortgage Talk weekend. So, Anthony, those are some pretty sobering, I guess, and very interesting comments from Warren Hogan.
Yeah, absolutely, Craig. Nice to be here again, mate. Look, I think Warren's identifying that a lot of the inflationary pressures now are coming from domestic pressures as distinct from overseas pressures, and a lot of the inflation is potentially becoming entrenched. And the only lever the RBA fundamentally has is on interest rates. 3 or 4 months ago, there was talk of rates falling. We've had obviously the budget with some inflationary pressures still to flow through. And we're obviously seeing, as Warren's identified, that core inflation of 4.1%, once the outliers are removed, is potentially becoming entrenched, and that's the RBA's concern. And Warren's even forecasting a rate rise as soon as the next RBA meeting, which is a lot earlier than any would have expected and different to a lot of what has been expected around potentially are we at the peak.
And when it comes to Warren Hogan, he is certainly not shy. He doesn't shy away from saying, well, there's a little bit of a barometer that is showing that inflation is still running a little bit hot. And he's always suggesting, right, you need to pull that lever and increase those rates. Because you look just after Christmas, and as you say, all of the talk was about the interest rates coming backwards, not increasing. And I think now we're at a very interesting time for investor trends and what they're likely to do.
It's an interesting time in the housing market where we've obviously got this underlying chronic shortfall of supply, and that's been influencing market behaviour for a while. But I think we're now starting to see affordability pressures, inflationary uncertainty, rate uncertainty in terms of what's next, starting to impact the market and starting to create some trends. And as you touched on there, we're seeing that in the investor market. Investor behaviour is actually up about 20% over the last 12 months. But what we're actually seeing is a large portion of investors are now first home buyers. They're unable to purchase a property in the areas they like. So they're actually looking at rent vesting and buying a property in an area that they can invest in that potentially they might live in down the track. In fact, a startling 46% of investor credit flows at the moment are from first-time buyers, which is well and truly up on what you'd expect and what the historic data points to. So we're seeing a change in behaviour in investors and a change in areas that investors are investing in. They're investing in some of those less traditional areas where the capital growth and rent's still a consideration, but also consideration around where they might live down the track is coming into play as well.
Yeah, and here's a question for you, because yesterday morning we were talking to Lauren there in Brisbane. She's a buyer's agent. She was telling us just how many of these clients of hers are first home buyers, which I thought was pretty interesting, because a lot of first home buyers just can't afford to engage with a buyer's agent. And my question is, just with your clients alone, I mean, how many of them actually use buyer's agents?
Yeah, really good question. A lot of them like the idea of buying a buyer's agent because we've still got that concentration competition. It's very, very hard to get in the market, particularly for a first home buyer, navigating the real estate agents, navigating the offers. But as you say, how do they afford them? Buyer's agents can be $20,000, $30,000. They provide a very good value service in terms of securing a property, probably earlier than when the buyer might have otherwise done it, so potentially saving money, securing properties off market. However, one of the biggest challenges for first home buyers is the deposit. Often it's mum and dad who might kick in for a buyer's agent, or often what we're seeing is first home buyers just can't afford them. Most of our buyer's agents' clients are the investors or those looking at upgrading, with the odd first home buyer who might be getting some assistance from mum and dad.
And here's another question I wanted to ask. Off the back of a conversation that I had last weekend with a friend of mine who is at the moment going through the whole mortgage process with his bank. Now, he's been with the bank for over 20 years and was told by the mortgage broker that the banking history doesn't really play a factor in the requirements that the bank looks at, which I thought was really bizarre. I thought that's a strange position. So he asked me of what I thought, and I said, well, perfect person to ask that to is you. So what do you think?
I think the comment's probably in relation to, with open banking now, effectively the banks can have a look at consumer behaviour across the board, and effectively they're looking for good credit conduct. Now, whether that's with your existing bank or whether that's with another bank you're potentially going to, if you can display that good credit conduct, then that's going to hold you in good stead. Look, I think there's nothing wrong with, and I think there might be some intrinsic benefit of, if you're going with your existing bank, having a good credit history, showing loyalty and being a long-term customer, that can often play into your hands. But ultimately, they're going to be looking at your credit scores and behaviour. The other thing with sticking with your bank, sometimes there's some features like bridging finance or something like that you can only do with your existing bank. So there are some intrinsic benefits, I think. But with all this open banking, it's pretty much data, access to data. Credit reporting is really open for all banks to view across the board, and for us as brokers to make assessments on.
Okay, so perhaps if you've had that sort of comment made to you and you've been with your bank for a number of years, let us know. The email address here is yourrealestatepodcast@gmail.com. We'd love to hear from you. And of course, we're consistently talking about this chronic housing shortfall, and there are simply just not enough houses to go around. Gee, I wish we had plenty of houses to do that. And the budget, as you know, Anthony, focused on the supply side initiative. So how did all that shake out for you in your mind? Are we tracking in the right direction?
Look, I don't think we are, to be blunt. We've got a chronic shortfall of housing. Some are forecasting we need to be building over 300,000 houses and units each year over the next 4 or 5 years to catch up. We've got record migrant numbers. We've got affordability constraints impacting the market. For example, we're seeing growth in the lower end markets. In the upper quartile markets, we're actually seeing a slowing of growth because people just can't afford to buy in those areas anymore. The government talked about building 1.2 million homes over the next 5 years. They've built a handful of them, in inverted commas, with about 170,000 in the pipeline, which is well and truly short of what we need. The construction data is showing us that we're below 5-year trends in terms of credit approvals for both houses and units. And probably the biggest concern is around the units, because obviously with units, you can have higher density housing and more of them can go up more quickly. So we're well behind the 8 ball. There's got to be a big shift in terrain around the migrant numbers, and also around opening up some of these greenfield projects, having the different levels of government talking to each other to enable some of these projects to go ahead and be built as quick as we can. There's issues flowing down to homelessness. People just cannot afford other houses, and rent's one of the biggest drivers at the moment of inflation as well.
Yeah, it's a massive problem and it's causing people a lot of stress. And the RBA, let's talk about them because they are meeting. It's not too far away. It's coming up on June the 18th. And this is going to be an interesting decision, given that it's very clear that economists are somewhat split. And I find that interesting in itself, that you've got some economists saying, you know, we're probably likely to see the rate come down this year. And then we've got others like Warren Hogan, who is saying, and you've got to say, he is saying it with confidence, that this inflation data will likely push the RBA to hike the interest rates on the 18th of the month. So where do you position yourself regarding this rate hike?
Yeah, look, I think I'm on the side of Warren to an extent, whether it's this meeting or one of the subsequent ones. I think where the inflationary trends are coming from, which is our domestic economy. I think the fact we've still got the tax cuts to come through on 1 July, which will provide some stimulus to households, as well as some of the rebates announced in the recent budget. Even the recent wage increase of 3.75% announced this week are all pointing to adding to inflationary pressures. And at the end of the day, the only lever the RBA's got is in and around monetary policies. I think there'll be a lot more conversation from the RBA about increasing rates than decreasing rates at this meeting and the next couple of meetings with where the economy is sitting right now.
Well, it's going to be interesting. You're going to be joining me once again as we go down this whole rabbit warren. And the 18th, of course, will turn up soon enough. Anthony Landau, plenty of information this morning. He is your mortgage surfer, of course, probably headed out for a nice surf just to relax after a busy week, eh?
Yeah, hopefully this rain stops a little bit, and there's a hell of a lot going on in the economy and the housing market. So we'll keep an eye on it all as we work towards the RBA meeting on the 18th of June.
Gain insights with exclusive conversations from real estate professionals about buying, selling and investing across Australia.
So I contacted the shipping company to let them know we were ready. And they came back and said everything has been sitting in nearly a metre of flood water since April 16th. So obviously we were pretty devastated. I went to the warehouse and spent a whole day there opening up 133 boxes to see what was salvageable.
In Dubai, it's all luxury. Sometimes somebody may look at something a little bit more affordable depending on the area, but these are just the two areas that developers focus on. They don't really focus by thinking outside the box. And I think working from home, especially for some of these industries that it's ripe for that, they would also have a lot of interest.
We connect you to the best real estate information across Australia. The Real Estate Podcast.